Good morning, hello and welcome to Opening Bell. Thank you for joining us on Moneycontrol. I'm Surabhi Upadhyay. It's a Friday morning. We have made it through till the end of the week, and what a week it has been. Markets absolutely roiled by the tensions in West Asia, and those tensions haven't ended. There's a lot of rhetoric. There are a lot of statements being made from both sides, but the sum and substance of it is that oil prices are still elevated, Hormuz is still shut, and markets are getting whipsawed between gains and losses. So there's plenty to cover, and I'll get to all of that in just a bit. But first, let's give it up for the boys in blue, India's cricket team. What a wonderful, wonderful match yesterday versus England, and I'm sure all our viewers, of course, got that. And some fantastic visuals right after that as India storm into the finals. It was a delightful match. I saw some parts of it. But amazing batting performance coming in, big runs being scored, targets of 250 plus being placed on the board to chase, and a great fight by England as well. So an absolute delight for cricket lovers. And of course, now it's going to be all eyes on the boys as we look at perhaps getting that trophy on Sunday. So that's the big one to watch out for. Plenty of action lined up, and hopefully this time it won't be market or geopolitical nervousness that we talk about on this weekend. Hopefully it'll be all about sports and cricket. But for the time being, we have a full trading session ahead. So let's get started with the top headlines. The West Asia crisis enters its seventh day. Iran fires more missiles and drones across the Gulf region as the war shows no let-up. Meanwhile, US President Donald Trump urges Iranian forces to lay down their arms, adds that Iran is being demolished ahead of schedule. Stocks on Wall Street closed lower amidst the war in Iran and a spike in crude oil prices. The Dow sheds nearly 790 points. The Nasdaq falls more than 0.5%. Markets in the Asia-Pacific region open lower, but some of them are now climbing into positive territory, tracking those losses on Wall Street. The GIFT Nifty is indicating a cautious start for Indian equities. Brent oil holds at $84 a barrel, pairing gains from the previous session after the Trump administration signaled it is considering several options to address the surge in oil and gas prices amidst this war in Iran. Gold prices erase early gains as reduced expectations of interest rate cuts by the Federal Reserve offset safe haven demand. Some relief for the oil sector. U.S. Treasury Scott Bessent announces a temporary 30-day waiver to allow Indian refiners to purchase Russian oil. The measure authorizes transactions of oil already stranded at sea. Meanwhile, addressing the disruption in gas supply, government sources say there will be no rationing or cut in cooking gas and fuel supply to consumers. Okay, so let's quickly go over the cues that we've seen in the overnight action. So Wall Street's still worried, and still worried why? Because oil prices, despite all the claims that are being made, oil prices are not showing any signs of a significant let-up. So this whole geopolitical situation and what it means for inflation and for oil and gas, that led to about a 1.5% drop on the Dow. The S&P 500 and the Nasdaq were relatively better off. They didn't fall so much, but they were also down. Now, US oil, NYMEX oil surged almost 8% as these energy worries are now hitting the US. Brent oil also rallied yesterday. It was up 5% in global trading action. This morning, prices are again above $84 a barrel. So for India, the worry is really not diminishing, not till we see a meaningful cut in oil prices and a resumption of gas supplies. Now, one thing that's important, and this is a report that's coming in from Reuters, China is apparently in talks with Iran to try and convince Iran to allow safe passage of vessels, ships carrying oil and gas through the Strait of Hormuz. Let's see how successful those talks are. This is as per Reuters. Now, today is going to be all about the US jobs report. The February non-farm payrolls report is going to be due today, and the street is expecting that 50,000 jobs will be added, which will be a lot lower than the 1 lakh plus jobs that were added last month. But let's see, 50,000 is the estimate right now. Yesterday, the dollar index continued to inch higher. In fact, this week, all this risk-off has meant the dollar index has gained 1.5%. It touched a high of about 99.25 overnight, and now it's just around the 99 mark this morning. That's the DXY. US bond yields are surging because there's a lot of concern about inflation. If oil continues to march higher, then inflation was bound to go up, and that led to the yields pushing higher by almost 5-6 basis points. The US 10-year yield now is at 4.14%. That's quite a level that we've seen. The gains that we've seen this week. Last Friday, yields were down to about 3.9%. Now, as we're ending this week, we're talking about 4.14%. By the way, separately, on tariffs, US states, including New York, are now moving to launch a legal battle against President Trump's latest global tariffs. Remember, IEEPA was not held up by the Supreme Court, and then he said, okay, I'll use the Trade Act to levy 15% global tariffs around the world. Now, US states are trying to block this, and they've moved the court, saying that the use of the Trade Act itself is illegal. So, more legal challenges and more uncertainty on the tariff front. Let's talk about our trading action. For what it's worth, Thursday was a really good day. We finally got a relief rally after 3 consecutive days of losses. The frontline indices were up about 1%, but the Midcap market did even better yesterday. The market breadth was fairly strong. The Midcap index was up 1.5%. So the question is, can the bulls prevail? Because some of the Asian markets are now showing some green again. The Nifty is still below some of the key moving averages, the 200-day simple moving average or the exponential moving average. The FPI selling is still very much on. FPI is sold off yesterday. Cash stocks worth about 3,700 crores, and domestic institutions, as you can see, were buyers. They bought equity worth about 5,150 crores. Finally, I just want to talk about what Scott Bessent has said. Let's put up that quote if we can. He took to social media to announce that India is being quote-unquote allowed to buy Russian oil. Now, there are those who will argue that it was the US to allow us anything. But, this is important because the last thing you want to deal with is additional sanctions and the additional sort of wrath of the US. Now, there is this official 30-day window that has been declared, and that's Scott Bessent announcing that, to allow Indian refining companies, HPCL, BPCL and IOC, to buy Russian oil till supplies resume from the Middle East. So that's really a silver lining, and maybe it helps the overall market sentiment as well. So that's a really important statement that came through. What next for the bulls here that have been really cornered this week? Well, let's bring in our guests. We have Raja Venkatraman, co-founder at NeoTrader and trading influencer. And of course, Mayuresh Joshi is with us. He is Director of Research at MarketSmith India. Thank you so much for joining in, Mayuresh and Raja. Hopefully, this is going to be a better Friday. Hopefully, this will be a better weekend. More about cricket than about flying missiles. Should be about flying batsmen and flying bowlers. But really, what a week. Thank you very much for joining us on the show. Mayuresh, let me open with you. I know it's a silly question to ask, but I still want to ask it. Are we past the worst?
Morning, Survi. I hope, for the sake of humanity, that we are past the worst. But I think the volatility might continue. And as you rightly pointed out, I think the latest tweet that has come through in terms of India allowed to buy Russian oil for the next 30 days, I think that's a respite. Because whatever said and done, I think crude oil and the spike thereof is the only worrying factor for the Indian markets as we speak, specifically in this geopolitical aftermath as we are going through at this juncture. And therefore, any respite on this front is obviously going to be better in terms of how our positioning is, both in terms of the CAD, both in terms of the inflationary aspect from a macro perspective. And therefore, this is big news, in my opinion. Again, I think what comes through over the next few days in terms of de-escalation or otherwise will soothe the nerves of the market. But historically, I think what we've also learned from earlier wars as well, and though Iran might actually be a long drawn-out process, you never really know. I think the drawdown has been anywhere between 8 to 10%. We are already, I think, 7.5% down on the Nifty. So again, I think going by historical precedences as well, I think we're almost close in terms of what historical averages probably mean or indicate in terms of market drawdowns. And therefore, again, as O'Neill always used to say, I think these are opportunities or times where you should probably be looking at good sectors, identify good sectors, good stocks, keep those stocks ready. And as the market swings back into a very positive sentiment, I think you can keep on adding those stocks that you created in your watch list. So I think it's a good time to start creating a watch list that the market is in fear as we speak right now.
Well, I'm going to come to your watch list for sure. Those beaten down names that maybe that, we are finally getting an opportunity to buy. And that's exactly what I want to talk about in just a bit, Mayuresh. But let's just get the technicals, out of the way as well. Raja, morning. So yesterday the bulls managed to prevail. They managed to hold. And as of now, at least it looks like this level of 24,300, that's not breaching. What would your recommendation be for today? Is there an intraday trade on the index at all?
Yeah, good morning, Surbhi. And the overall market outlook continues to oscillate between a buy and a sell opportunity. Yesterday, the rally which we witnessed, there are claims that the rally was an induced rally, and probably a news flow that came through was what was triggered. And yes, there was some short covering from lower levels, and I see that 24,300 will continue to be a zone which everyone will watch out for. But at higher levels, we continue to remain pressured, and the constant news flows that are emerging because of the geopolitical tension that will continue to rule the sentiment. While the sentiment may remain fractured, there are opportunities that are available, but then sentiment will definitely rule our decision making. So at this juncture, I would say that it's best to bide out the time and see what really happens at this current juncture, because it's more of a trading scenario and more of an intraday nature. So yesterday, if you had an opportunity to go long, then ideally you should have exited at higher levels, because at around 24,800 to 900 is a very strong resistance zone. So I feel that if you want to take as a levels perspective heading out into the next week, I would wait for a closing, Nifty spot end of day closing above this particular level before I venture into some buying action. Well, the ideal scenario is always buying on dips, but then with the kind of scenario that is in play, it's not everyone's cup of tea. So that's how I would take the current market juncture. And I was expecting Bank Nifty to revive. I saw that the Bank Nifty has not revived yet. So there is a bit of dichotomy on the indices as well. So overall, the indices are not in alignment. So that's why I am taking a step back and waiting for these things to settle down. And as we have seen over the weekends, we have always received bad news. Let's see, over this weekend, we received some positive news from the Indian team as well.
I couldn't agree with you more. I'm done with these working busy weekends with so much of, angst for the market and more cues coming in. This time, only good news that the boys in blue have won the cup. That's all we want to hear. Completely agree. Raja, okay, let's just quickly get your perspective on oil and gas stocks, because they've been absolutely whipsawed. And let's deal with it as a pack. Now, on OMCs, there's positive news this morning because of what Scott Besson said. They can go ahead and buy Russian oil. So would you expect any kind of a relief rally? If yes, is there a trade? Should one look at, looking at long trades at all? Or is this a bounce that you should actually use to exit? Whether it's oil marketing stocks or even gas stocks. Gas stocks have a different story. There is still no Qatari gas coming. So I don't know if, for instance, Petronet LNG sees a bit of a relief today, or some of these other IGL, MGL. But just for both buckets, tell us what is to be done. Long trade or use the bounce to exit?
Yeah, see, overall, I feel that if one should have exited, they should have exited long back. Now, what you could expect is news could play as a good relief, and it could induce some upward momentum. So what I would do is I would definitely look at the OMCs, because they are a good bet here. And amongst the OMCs, I would look to place my bet on BPCL, because the overall price movement over the last few days before the war started was quite encouraging. So I feel that this positive news can induce some bit of momentum here, and one could use this as an intraday play. Exiting is not on the cards, and I would say that at the current juncture, if things settle down, then we could again see some upward momentum in the OMCs. So I would place my bet on BPCL.
Okay, all right, Mahesh. Now let's come to the Middle East hit stocks, the entire universe, and let's just go one by one to get your recommendations. So there are the likes of L&T. And L&T already saw some pullback. I mean, yesterday the market was in a different mood. So what would you do with some of these, or even something like a Kalpatru or KEC? They all have been receiving orders from the Middle East, right? So what would you do with this set of stocks? And then there are the oil and gas plays, which are right in the middle of the storm. So just let's go, segment by segment and get your advice.
So, Survi, from a heavy engineering perspective, obviously, I think the sentimental hit is largely done, in my opinion, as far as price action is concerned, whether it's L&T or a Kalpataru, as an example. I think if this elongates longer than one expects, obviously, I think it's going to take a hit. So I think that is the time when the revisions will actually come in place in terms of how FY27 numbers will play out. But if this is only for a few weeks, as is expected as a base case scenario for the markets, and there are no disruptions across the Middle East, I think activity should start resuming slowly and steadily. And therefore, I think a stock like L&T, which has got beaten down, should probably consolidate. Anybody holding, obviously, should continue holding. When it comes to the oil and gas stocks, obviously, I think there is a lot of news flow as we speak. And nobody's really sure how this news flow will play out over the next few weeks. And therefore, I think you are getting these sentimental reactions every passing day. With Brent prices up, obviously, I think upstream companies are going to benefit as the prices go up quite significantly, and it's a filtering down effect with realizations improving on the top line. For downstream companies, again, I think the expectations in terms of the recent announcements in terms of buying Russian oil, as an example, I think that acts as a respite. However, I think it's too volatile as we speak. And for midstream companies, again, I think what happens with the LNG market is still circumspect as we speak. So again, I think not a structural play as we speak, purely based in terms of how the news flow is playing out. I think the three sectors that we are probably keeping on our watch list are stocks within the BFSI space selectively, are stocks within the consumer discretionary space, and selective stocks within the infra and manufacturing spaces.
Okay, all right. And I'll get to some of the specific names in just a bit, Mayuresh. Let's also run through today's stocks and news. There are a couple of companies that are news beyond the implications of this war. So just want to, bring our viewers up to speed with that as well. So let's run through the list. Actually, some of the names are relating with oil and gas itself. For instance, Petronet LNG. Petronet LNG declared to the stock exchanges that it did receive a force majeure notice from Qatar Energy. And it went on to say that this force majeure notice was also then, issued to GAIL, IOCL and BPCL. Petronet is saying right now the implications or the cost impact of this cannot be ascertained at this point in time, but it's simply is not receiving gas from Qatar, and therefore it cannot be, fulfilling its obligations with its buyers as well. Let's talk about MRPL now. MRPL actually said that it has not declared any force majeure. There was a Bloomberg report, a lot of reports suggesting that some of these companies are halting operations because of lack of gas supplies. But MRPL claimed that is not the case. They have not done this, at least as of now. Let's talk about Sami Hotels. Sami is going to be acquiring 70% stake in Rare India for a consideration of about 47 crore rupees. These are plans with a potential affiliation with Marriott International. So they're looking at adding more rooms and continuing their expansion. Let's talk about Dr. Reddy's. Dr. Reddy's received the US FDA Establishment Inspection Report, EIR, for its Srikakulam facility for that plant. Now, this inspection has been classified as a VAI, which is a voluntary action indicated, which is less severe than the other category when the US FDA itself moves to take any kind of regulatory action against a particular plant. So this is a little mild compared to the other actions that the FDA could have taken. So let's watch out for Reddy's. Fractal Analytics is going to be in focus. It came out with the first numbers since listing. Profit is up about 10%. Revenue is up about 21%. So that remains on our radar as well. A couple of stocks in news there. Okay, let's get back to our guests. Actually, let me talk about Fractal on a different note. We haven't discussed this stock for a while. It's a new stock, new company on the street. And before we got into this whole geopolitical war situation, it was about AI wars, Mayuresh. Everything was about AI, right? And finding the right AI stock and dumping the ones that don't have AI. Any thoughts on Fractal if you looked at it around the IPO time or the numbers today?
No, I think a decent business model should be. And again, I think with this entire AI ecosystem actually going berserk, I think both their models in terms of the enterprise model as well as the retail model probably should work in its favor going forward or down the line. And therefore, I think the numbers which will now start coming through, reflecting on the balance sheet, are going to be very, very critical. So no opinion as on date. We are having a neutral or fractal. But I think the more important aspect is that it is in the right areas, and therefore, if numbers start showing up, they will probably get re-rated to a certain extent.
Okay, that's fractal. Mayuresh, now let's talk about your stocks. You were saying that you've got a watch list ready. The market's given an opportunity with the index now coming down to about 24,300. So what's on your watch list or potential buy list?
So I think if I compare our Indian performance and our team level in the World Cup, Surbhi, I think a few stocks representing a few players. So I think the consistency that Bumrah has probably shown, and the Man Friday that he is always in terms of the Indian context, SBI from the banking name is a consistent performer in our opinion. I think it's a very strong set of numbers that State Bank has probably delivered in the quarter gone by. Very strong rating rankings as we see it. Asset quality prices are down. In fact, the NIMs are expected to be around 3% as we speak. And therefore, any kind of a pullback that you probably get, and a lot of good base building that probably happens, is something to be watched out for. Some of the names within the infra stroke manufacturing theme, TD Power Systems, if it declines, I think is a good bet. Our own sense is that the numbers that the management has put forth, that they've done around 1,200 crores in terms of top line. The management expects this year to close at 1,800 odd crores and around 2,200 to 2,300 crores in the coming year. So with a 19% margin, you can assume that the EBITDA growth will be significant, where the market is probably struggling to find ideas where earnings growth can be in excess of 20-22 odd percent, which TD Power is probably doing as we speak. A few of the auto anchors is something that we've got on our radar. Recall, I think diversified model, agnostic products that they're probably creating for the EV ecosystem, decent margins, and margins expected to go a tad bit higher as the EV product profile improves in the balance sheet. Similarly, Carraro India, the subsidiary of the Italian major, which is significantly into 4WD in terms of tractor axles, etc., are expected to do well. They've expanded their capacity, and the expectations in terms of exports plus domestic as a theme expected to carry on. So our own sense is that a few stocks within this sectors, when earnings growth are looking very, very strong and stable, might actually continue to.
So SBI is the Bumrah. And TD Power, sorry, I missed TD Power. What is TD Power?
No, no, I could not think of any player, but I'm pretty sure we'll create something by the evening and I'll send it out.
That'll be a very, very nice analogy for sure, Mayuresh. Okay, I think we'll start getting our pre-open rates as well. So just very quickly, let's see what is the mood on the street, because the mood in Asia is very muddled and it's very, very mixed. I want to fire up crude oil prices as well, because it's basically boiling down to that. Those are the nifty rates that are coming up on the screen. And in a bit, I'm just checking oil prices as well. Oil is still climbing, and that's the problem. 84.41 on Brent right now. So oil isn't cooling off. And that's the worry. 0.25% up on the Nifty in the pre-open, at least as of now. Still waiting to get rates on some of the other indices out there. Let's see in terms of individual stock action, if anything really stands out. Okay, SBI 3.5% of stock that Mayuresh really likes is ONGC. Reliance is up 4%. Now it may not be a 4% kind of a move, but remember, if Indian refiners are allowed to buy Russian oil, that takes care of a lot of the immediate concerns, and that could be explaining the kind of pre-open rates we're seeing on some of these stocks. Let's pull up BPCL, HPCL and IOC. HPCL is up 3%, IOC is up 1.5%, BPCL also positive. So all the refining companies are quite positive. Reliance is the big beneficiary, of course, as it is going to be allowed to get back to sourcing Russian oil, Russian crude. So that's how it's pretty much playing out for the time being. There's some buying on Infosys, on Tech Mahindra. So a couple of these IT names are looking smart. BEL from the defense space. There is M&M and Bajaj Auto from the automotive space, even Eicher Motors. So some of the auto counters are also looking quite okay. Not bad. On the downside, there's Interglobe Aviation. Obviously, with the no let-up in oil prices, the sentiment is still very negative around airline stocks. So 2.5% down there. And some of the banks are right now a little weak. For instance, ICICI Bank and HDFC Bank down about 0.5%. By the way, Reliance, the rate on Reliance has cooled off. So yeah, that was just an initial pop. Now Reliance is down about About 0.5%. Let me just see how it is. Actually, just very quickly on Reliance, let me get back to Raja. Raja, what would the advice be on Reliance itself? What are the levels to watch?
Yeah, see, we are seeing a beneficiary of the news flow, but overall, Reliance is a very slow-moving counter, and you will see over the last few quarterly numbers, the stock is not really able to pull out. The numbers have been great, but the response to the numbers have not been so exciting. So I would say that if you are having a 2 to 3 year outlook, then Reliance would be a good stock to invest because over a period of time, Reliance will be able to generate the return for you. Otherwise, it's going to be more of a intraday kind of a play in Reliance. If you want to invest for a longer term, then Reliance is a good bet. You can see a 10 to 15% upside from the current levels.
Okay, so good for long-term investors. Got that. By the way, some of the defense stocks are up and about. Mazgaon Dock is up 2.5%. Mazgaon this week has put up about 4%. Not 4%, actually 8% in such a volatile week because one, it has the geopolitical tailwind, supporting it. But more importantly, there's a large submarine order that the street is sensing. And the winner should be announced any time now. The order could be as large as 1 lakh crore rupees. These are the Scorpene submarines, and I think there's a lot of excitement just ahead of that announcement. So, Mayuresh, I know you have to go quickly, but before we let you go, on defense, what's the advice? Would you look at any fresh entries, any fresh purchases in defense stocks, and a word on Mazgaon as well?
No, I think the expectation of the order is probably the buzz on the street. And therefore, I think structurally, I think the sector is well poised because you've got revenue visibility over the next 5 to 8 years. The margins are pretty decent in terms of the new orders that are coming through. And as a base case scenario, both these aspects should work in favor of a whole host of defense companies. Now, obviously, I think you are going to get a couple of quarters here and there where there is going to be an execution miss, either for monsoons as an example, or any other reason. And therefore, I think structurally, I think these stocks are very well placed as we speak. The budget outlay is pretty decent. The expectations in terms of export opportunities are also pretty decent that a lot of these companies can showcase. And therefore, I think from a product mix perspective and from a stability in earnings perspective, where earnings are expected to probably go in mid double digits for a whole host of companies, these stocks might actually deliver on the earnings front as a base case scenario. Obviously, I think for a few stocks, valuations are tad bit on the higher side, and therefore investors holding on to these stocks, so we can continue to hold. Buying opportunities can come through. However, I think you might just need to be a little bit patient in terms of those dips expected to come through. Those dips on stocks like a Solar Industries, as an example, as we speak, BEL, which has performed exceedingly well as we speak. You probably need to have a little bit of a patience for those dips to come through.
Okay, all right. Mayuresh, thank you very much for all the advice today. Hope you have a great Friday and hope you have an even better weekend, devoid of any tension and any geopolitical news, and only lots of fun and good news on the cricket front, as Raja said as well. So you have a great Friday. Thank you for joining in.
Thank you. Same to you, Surbi and Raja as well.
Yeah.
All right.
Same to you.
Thank you. Thank you. Raja, request you to stay on because we have our viewers who are asking a couple of questions. We need to look at some, specific stocks on the other side in the pre-open session. But in the meantime, let's leave our viewers with a lot of the stocks that are news today. Check out some of the global indices and how global markets are shaping up. We'll be back in the next 60 seconds. Okay, all right. As you can see there, some of the global markets now are showing a fair amount of green, and that was the Hong Kong Hang Seng, which is up about 1.5%. The Nikkei was down in the earlier part of the session, but the Nikkei is also up slightly. Mainland Chinese markets are also higher. So the short point is that markets are not doing too bad. I mean, Nikkei, Hang Seng, Shanghai, these are the markets which are up. The South Korean Kospi is still down. So we'll see how that plays out. For the time being, let's just fire up crude oil prices and let's look at what we're getting, because crude is the worry, and Brent crude for us is still above $84 a barrel. So Brent right now 84.53. That's what Brent oil is doing. It's lower by about 1%. Last night prices surged 5%. They've pulled off a little bit, but still that level is northwards of 84, and that's the problem. I just want to go back and reiterate the big story that's coming in on oil. Scott Bessent saying that the US is going to allow Indian oil refiners to buy oil from Russia for the next 30 days. So let's just pull up that quote again if we can. He basically goes on to say that in light of what's happening in West Asia, this exception is going to be given to Indian oil refineries. There we can see, to enable oil to keep flowing into the global market, the Treasury Department is issuing a temporary 30-day waiver to allow Indian refiners to purchase Russian oil. This deliberately short-term measure will not provide significant financial benefit to the Russian government. And then he goes on to say that he's very confident that eventually India will be scaling up its oil and gas purchases from the US. Now, this is not all. We also heard from the US president yesterday on this spike in oil and gas prices. President Trump was speaking at an event with the Inter Miami soccer team at the White House, and he said that Iran was calling to ask how to make a deal. He also called on Iranian diplomats around the world to request asylum and help shape a new and better Iran. Listen in.
And yesterday, my administration announced decisive action to help keep down the oil prices, including offering political risk insurance for tankers transiting into the Gulf, as you know, pretty dangerous territory. Further action to reduce pressure on oil is imminent, and the oil seems to have pretty much stabilized. We had it very low, and in the long term, the actions we're taking will dramatically increase the stability of the region and oil prices and stock markets and everything else.
Okay, that's the US president on the oil market saying that there will be more actions coming. It's not helping the market right now. They've made this promise of talking to insurance companies and to ship owners, but none of that has helped. Hormuz is still shut, and the price of oil is still over $84 a barrel. Okay, let's get to our viewer queries. Good morning to everyone who's joined us on YouTube, who's watching this telecast. So lots of questions actually on oil and gas stocks. James is asking, is it good to hold ONGC and GAIL? He says he's been holding these two stocks from the last 1 year and they are currently in profit. Raja, this is what we were discussing just earlier, right? That there will be people who will wonder whether any bounce is a good exit opportunity or whether at least for upstream companies. Now, James is holding ONGC, which is an upstream play. Whether it makes sense in keep riding this higher. What would your advice be on GAIL and ONGC specifically?
Yeah, when you look at the news flow, you know that these counters are going to benefit. So, and if he has entered it at a good spot, so it's always better to trail your stop rather than exiting prematurely. So that's the best way to trade your investments, because the markets are definitely showing more upward possibility in ONGC in comparison to GAIL. So if you want to, consider, booking some exiting some stock, the stock would be GAIL. ONGC is in a much better scenario, and I would say that the upward traction in ONGC can continue.
Raja, another viewer called Kodai Ryan is asking about Oil India. Again, an upstream play. Between ONGC and Oil India, which is a better stock to trade on the long side to hold?
Yeah, ONGC would be a better play. So we also a disclaimer here from my side that and whatever I am sharing here is only from an educational perspective. All the viewers are requested to take advice from their financial advisors and take a decision. I'm purely saying from an educational perspective on how the setup is looking and what is the future outlook.
Okay, fair enough. That caution is well taken. We have some questions on NBFC stocks as well. Raja, there's a viewer, Bharat, who's asking for a view on Geo Financial Services. There is a viewer, Paddy, asking about Muthoot Finance. Can I enter for the long term? Any thoughts on the NBFCs as we're hitting market open?
Yeah, so Geofinance has not been able to actually work the charm here, though it's backed by one of the most powerful groups. It's not been able to take their association with BlackRock also much ahead. And what we are seeing right now is over the last 3 to 4 months, steady profit booking at higher levels and a consolidation phase. So this is not a good stock I would enter. If you want to enter the NBFC space, I would rather look at Shriram Finance. There are stocks that have been able to weather this recent storm. And the pullbacks at the current juncture would actually be a better bet into the NBFC space.
Okay. The market has opened and it has opened on the way down. So the caution continues on the street and a lot of yesterday's gains are being given up. Remember, the Nifty rallied about 1% yesterday. Now it's given up half of that gain. The Midcap index is actually relatively much better, in a better position. The Midcap index is flat at this point. It's down just about 0.2%. As we're speaking, the Bank Nifty is very weak. Bank Nifty is down about 0.7%. So that's a weak start for the financials. Let's see what's down. Interglobe Aviation, because oil continues to march higher. 2.5% lower on Interglobe Aviation. ICICI Bank, talking about weakness in bank stocks, even HDFC Bank. These are the stocks that are on the weak side. Max Healthcare, Ultratech Cement, these are the names which are all on the losers list as far as the Nifty goes. As you can see, some of the stocks are up on your screen. Asian Paints is also lower. Obviously, with higher oil prices, their input costs go up, and Asian Paints is down. Asian Paints has lost about 5.5%, I think, for this week. Yeah, Asian Paints has taken a 5% knock for this week. L&T has resumed its fall. It's down about 1.3% today. You can see some of the other names as well. HDFC Life also lower. Tata Steel. Metal stocks have been very, very volatile this week. This morning is a down morning for some of the names like Tata Steel. Adani Ports, Bharti Airtel, Bajaj Auto, Geo Finance. This is a long list of losers, one of those mornings. Nifty is down about just down about 0.5% at least for now. Tata Consumer, Coal India, Axis Bank, Kotak Mahindra Bank. These are stocks down about 0.5% to about 1%. Okay, let's see the gainers. Reliance is seeing a bit of a relief because of that window opening up on Russian oil, at least for 30 days, that the US has announced. Stocks up about 0.7%, Reliance. And those are some of the other gainers. There's a bit of a move towards IT today. TCS, Infosys, Wipro, all of those stocks are higher. There's Tech Mahindra also that's seeing some buying. And then there's BEL. BEL is the Nifty winner. And then the rest is IT. Reliance is up about 0.8%. So that's the picture, the way it's shaping up right now. Let me see the other refining companies as well. Reliance obviously is benefiting. There's not much excitement on BPCL. Let's pull up individual stocks now. BPCL, HPCL and IOC, the oil refining companies. HPCL is actually down 0.7%. BPCL is also lower. So no real cheer that they can buy Russian oil because the larger concern has not gone out of the picture. The war is still on. Oil prices are still shooting higher. So therefore, these companies are all down. IOC is also lower. There's no positive reaction on this Russian oil news. HPCL, IOC and BPCL, Bharat Petroleum, all those stocks are still lower. So that's how it's playing out. What else? Some of the defense names are doing well. From our stocks and list news, Masgaon Dock is up to 2.5%. DCX Systems, which got an order from HAL, is up about 4% as well. So some of the defense names are still active. Other than that, it's very, very cautious and quiet out there. That's how it's playing out. Let me see on the mid-cap list, what are the gainers and losers looking like? There's Schneider Electric, there's Fractal Analytics, which came out with numbers. Fractal is slightly higher. Karnataka Bank is up about 4%. Ramki Infra, which won a contract earlier this week. Ramki is also looking good. Some of the IT names in mid-cap, as you can see, KPIT, Persistent Systems. Some of the IT names are still finding some traction and they're still seeing some gains. Mid-cap losers, let's see now where the pressure is. So on the losing side, you've got names like Nalco, Bank of Baroda, PB Fintech. These are some of the bigger names where we're seeing pressure on prices. Also throw in a Bajaj Hindustan. I mentioned Nalco, SJVN, Ashok Leyland, SAIL. So these are some of the stocks where we're seeing pressure this morning. So mixed bag. Midcap's still better off. The Bank Nifty is under a lot of pressure. Bank Nifty is lower by almost 1% now. Big slide on banking stocks this morning. ICICI Bank, for instance, is down 2.5%. So that is the opening. 170 points down, not looking too great. Raja, before we let you go, just a word on IT names. There seems to be a flight to safety. These stocks have already been beaten down. They're cash-rich companies. On Infosys, TCS, HCL Tech, Wipro, what do you think of them technically? Is there any reason to look at a short-term trade, a positive trade on IT?
Yeah, overall, if you see the IT space have been caught in a whirlwind much before the war started, and I feel that the war has only taken over that particular phase of negative news flow. I think that negative news flow is not going to go away soon. So we need to see how the roadmap is going to happen for the IT big names, and only then you will actually be entering into from a short-term investment perspective. Others, I will say that it's best to stay out of IT. There are a lot of interesting sectors that are at work, which you pointed out, like the PSC or even the defense names are showing some promise right now. So I would say that IT as a sector, which we have been discussing several times in our show, I would say that it had the power of a sector-driven rally, but I think that has fizzled out. And with the AI nail hitting the coffin, I think that the IT stocks will take some time to recover. So I would not put my bet on any of the IT names. If you want to go for a trading bet, say maybe a 1 day or 2 day play, it's fine. Otherwise, then IT is not a short-term investing bet anymore.
And finally, Raja, this fall in the Bank Nifty today. I mean, the Nifty is down 0.5%. The Bank Nifty is down 1% at open. So that's maybe a little surprising. Your advice on Bank Nifty, bank stocks, and in general, your final best trading ideas this morning, looking at the open.
Yeah. So yes, if you recall at the start of the show, I said that all the indices are in dichotomy, and especially Bank Nifty is definitely showing some weakness here. Right now, what is happening on the Bank Nifty is managing to hold on to the last 2 days low, and that assumes some importance. I would say as we end this week. Yes, we have been having gap down openings, and over the last 2 days, the lows have been held. So I would wait for the first half an hour of the day to see what really happens on the Bank Nifty, and then I would take a call here. So basically, I would take a range trade here. I would see what really happens, and if Bank Nifty were to hold at the current levels, I would say that if you want to place a bet on any of the banking names, I would go to the mid-tier private banks, and from there I find that Federal Bank, with its robust numbers and also its performance over the last few days, is showing some good positive traction here. So you could say that Federal Bank would be a good bet from the banking space on the long side.
Okay. All right. So Federal Bank noted that. Raja, thank you very much for being with us this Friday morning. You have a great trading session. And hopefully it's going to be a fun and peaceful weekend without any more negative news. So thank you for joining in and have a good one. Thanks.
Same to you. Bye.
Bye-bye. Okay, the market has settled. The open is about 0.5% lower on the Nifty. The Midcap index is also already bounced in positive territory, by the way. Midcap index is up 0.3%, at least at this point in time. Let's introduce our next guest. Devarsh Vakil, Head of Prime Research at HDFC Securities, is now joining in. Devarsh, good morning. Great to have you with us on Moneycontrol today. It's a pleasure to have you on this show. So the market has had to take in a lot. And this geopolitical conflict came literally out of nowhere. I mean, no one was really anticipating it to be so big. But the question is that do you think markets, global markets and here in India, have they settled into a bit of a rhythm? Have we seen the worst of the hit? And should we expect maybe best case range-bound trade from here on? Because markets are no longer sliding now, even though the war is still on.
Yeah, thank you, Surbi, for having me. See, the first few days when the negative news flows came in, I think apart from the what most of the long-term investors do try to digest those flows, I think there are the first few days flows usually are a bit of a technical in nature where there are a lot of leverage positions which needs to be cleared off. And I think we seems to have passed those ugly selling now. Um, Fundamentally side also some of the reasons why we face so much decline or the selling has seems to be awaiting. India has got a waiver from US for importing crude oil for next 30 days. So that puts a bit of a ceiling for us on the Indian crude oil basket for now. RBI is doing a good job in putting a kind of a level where they are not comfortable above for the rupee as well as the treasury. We saw that they have defended those two quite vigorously in last few sessions. So macroeconomically wise, I think the worst seems to be over. From our market perspective, around 24,000, 24,300 levels, we have also come down to a level which is quite attractive from a price point of view. We already were in a time-wise correction for last 12 to 18 months. So we seems to be have discounted most of the worst news in the price now. And we feel that this is as good as any time to start increasing exposure towards equities, start allocating capital which you have kept outside of the equity markets, waiting to be allocated to equities. This is the time to start nibbling now.
Fair point. There was just on today's action, this big fall in bank stocks. The bank Nifty down 1%, Nifty down 0.5%. Would you read anything into it? I'm not sure if you're missing something. Global yields are up because there's this big worry that inflation is going to be now rocketing higher and the Fed won't be able to cut rates. And I don't know if that's the same worry here as well, that higher oil prices will force the RBI's hand at some point in time. Not sure if it's that, if it's something else, but what do you think?
No, I think this is a bit of a short term in nature. Yesterday, I think on the back of a news flow, we had a vigorous rally in the bank stocks. There was a quite a bit of short covering there, and I think once those talk news with Iran or the propaganda which we saw in some news wires, I think that has been denied by the authorities. So that could be some bit of selling, which short-term positions might be cleared up. But I think some PSU banks and many smaller private sector banks have come down to a very attractive level. See, I feel that the yields are now going to be controlled in global markets also and in Indian market also. If we just step back and see, um, the Western economies have a lot of debt on their balance sheet, so they do not cannot afford to have a higher yields. And in that context, we have to see the relief which India got for importing the crude oil from Russia, because they also do not want the higher crude oil prices uh, going into inflation and inflation leading to higher bond yields there. So this opportunity which we see in the bank nifty is actually I think is the good entry point for small private sector banks as well as many public sector banks to enter into it. I think the yields will be controlled, and March quarter numbers, as we saw from the previous fortnight, the credit growth is there in this system. Yields are under control, and I think we will see good numbers coming in from the banks from the March quarter, and that should justify the prices and help them rally from here.
All right. They were, so, people are really wondering, and I know the wisdom, and that's what you said as well, that this is a good time to get in and buy stocks. But people are wondering what to buy because you need to be AI proof, you need to be war proof, you need to be earnings proof. It's a tough market, right? So help us out. Let's build a framework for our viewers here.
Sure. So I think, as you said, there are a lot of ifs and buts, but I think we need to take a step back and see the structural themes, the longer term themes. couple of things which comes to my mind is first is the financialization of saving. That's a longer term theme, and I think through financials, uh, public sector banks, the capital marketplace, we can play that theme. Second is the energy transition, the power infrastructure theme, where we are seeing a lot of investments. And as you pointed out, we will require a lot of investments in this power infrastructure. So that's the second theme which we are looking at. And obviously the indigenization theme, the defense plays, the Atmanirbhar Bharat scheme of the government. There, I think domestic self-sufficiency is going to be one of the strategic important themes going forward. So if we can find individual plays around NBFCs, banking, capital marketplace, defense, power, I think we can construct a good portfolio which can sustain all the various short-term pain points which we are seeing in the market right now.
Okay, so that's how you would look at it. There were a lot of stocks which have exposure to the Middle East. Obviously, have been hit in the last couple of days, and some of them are big names like Larsen and Toubro. And there could be, companies in the power space, the transmission space, which have been getting a lot of orders from the Middle East as well. What would your view be on some of these engineering companies that get business from West Asia?
So I think this may last, the uncertainty may last for a while, but I think, see, good news and good prices do not go together. Right now, the news is bad, and that's why we are getting these good prices. So stocks like L&T below 4,000, I think it's as good as any opportunity for long-term investors who want to invest in these names to start accumulating. Because once the news flow will improve, I'm sure these prices will not be there on the screen and you will not be able to allocate to them. And mind you, these are not endless things. I think once these war and other wars which are there in the other parts of the geopolitical arena, I think once this settles down, there will be a huge wave of investments because then we will require the commodities, the contractors, the engineering place to again build this infrastructure which has been destroyed in this carnage. So I remain positive that these are the opportunities to look at such marquee names at lower levels.
Okay, so giving a thumbs up to the likes of L&T. There was, a viewer asked us, this is Harshraj Singh. He asked us that should we bet on stocks that deal with exports now? I'm not sure what type of exports he's talking about, but I think this question stems from the fact that we technically got a deal with the US. So it seemed like all is well and things are fine at 18%, but now it's anyone's guess because that whole legislation itself has been scrapped, or that original tariff has been scrapped. And then you have this added Middle East volatility as well. So whether it's textile, whether it's rice, we have a lot of these exporters are listed companies. What would your advice be here? Sugar, again, these are stocks linked to global prices, global exports or global markets.
Right. But I feel that this is not the time to allocate towards that. I think we do have a lot of plays in the tertiary sector, the services sector, which can also be a play on the export side. We have a lot of small IT companies which can be looked at this point of time where we have seen a lot of price correction. Other than that, I think the crux of the portfolio, the large part of your portfolio should be towards the domestic demand side. We are going to see strong private consumption. We are likely to witness a strong rebound in the rural demand. Government capital expenditure is going to be there. For next few weeks, we'll see that a lot of tenders and orders will come out to meet the March targets. Government has given a lot of tax reliefs in the form of indirect tax and direct tax to to the citizens of India, and I think that has taken a backseat in the overall geopolitical uncertainty. Once things settle down, I think those stocks and those companies, the mass consumption revival will take place, and that's where I think we should put the bulk of the portfolio. Some services exports companies can be there. The labor intensive exporters in textile or in other gems and jewelry or leather can be there as a part of a portfolio, but I don't intend to put large part of capital there because I think other opportunities are quite attractive at this point.
Okay, so Devarsh, finally, before we let you go, everyone's looking for ideas. Give us 2, 3, and these are, I'm not talking about stocks for today or 2 months or 3 months. I'm talking about people who want to build generational wealth, portfolios, at least medium to long term. Give us 2 or 3, interesting companies which meet all the criteria. Because like I said, the criteria is a lot. It's a very complex market. You need stocks which are, earnings proof, like I said, which are war proof, that don't have too much of global exposure, that will not be disrupted with AI. So it's a very tough market to pick stocks, I'm sure.
I agree. So I think it's best to leave it to the professionals to do that. Those investors who are right now looking to allocate new capital, I think right now the time is to first look at the large cap stocks. And I would go along first with allocating the blue chip names or the market names right now. And if I were to take names from the stocks which are under our coverage and where we have a buy rating at there, I can see easily 15 to 20% upside left for this next few months to year of the year end. I think we can start with large cap marquee names like Reliance Industries, ICICI Bank, L&T, SBI. First, we should have the courage and start allocating towards these stocks in the portfolio. And once the negativity of the news flow goes out of the market, gradually we'll start also allocating towards mid cap and small cap. We do keep coming out with small cap and mid cap names from time to time. It won't be appropriate for me to take name here, but every now and then there are opportunities. Like we identified Coal India a couple of days back where there was an opportunity to invest. So opportunities will keep on coming, and I think it's a good time as any to start first building portfolio towards the large cap names. First allocate towards those, and once we have the little bit of clarity, we can also move to mid cap and small cap in the second stage.
Okay, all right, got that. Thanks very much for joining in. Good to have you, and have a fantastic session. Have a good weekend, and hopefully we come back to better cues for the market on Monday morning. Thanks very much.
Thank you for having me on the show. Have a good weekend.
Thank you. Thank you. Thank you. Okay, let's do one thing. We will take a quick breather. The market is down about 100 points. But a lot of mid-caps are up and about. The Nifty is down about 0.5%. But look at the mid-cap index. Mid-cap index is up 0.4%. Plenty of gainers out there. Solar industry surging. Mazgaon Dock surging. Bharat Dynamics, big defense rally, which is very, very visible. BEML is up and about. All kinds of, basically all kinds of defense themes doing very, very well. That's the mid-cap index. So I'm going to take a quick breather. Check out some of these top mid-cap gainers. And we'll come back on the other side with our next guest. Welcome back. So, yes, absolutely. The defense theme is doing very, very well in the market today. But now we want to put the spotlight on a different sector, and I'm talking about real estate. And we're looking at real estate with a West Asia lens, of course, because this ongoing conflict in the Middle East has raised a big question on Dubai as a property market. It's been a super vibrant property market. A lot of global investors invest in real estate in Dubai. A lot of Indian companies, listed Indian real estate developers, have been expanding their footprint in Dubai as well. So is all of that at risk now? That's really the question. Well, we have with us Prashant Thakur, Executive Director and Head of Research at Research and Advisory at Anarock, joining in to take some of these questions. Thank you so much, Prashant, for being with us. Great to have you on Moneycontrol. Welcome to the show. And I really want to start by understanding that last piece first, the India link. Because, our mandate here on the show is obviously listed Indian companies. And like I said, a lot of Indian developers have now been looking at Dubai as a big market where they can expand. You have very wealthy HNI individuals investing in that market. So first, let's understand to what extent have Indian developers tapped the UAE market? What have we seen in the last 2-3 years? And as a percentage of their total revenue or their total, say, pipeline, is Dubai still a very small, small contributor?
So first of all, let us understand the overall size of Dubai real estate. So in 2025, $5 billion worth of real estate transaction was done. Real estate players accounted for close to 8 to 10% of this entire pie. So it is still kind of quite small as compared to this extent they have in the domestic country, and also the Indian accounted for 22% of the overall real estate transaction that happened in Dubai. So in my opinion, if you look at the host of benefit Dubai offers to the Indians, apart from proximity, golden visa program, tax-free regime, and then proactive policies for entrepreneurs and startup companies, that's a major attraction, and that's why if you see major listed developers are trying to tap in that growth story. Apart from exploring and encashing on the luxury story, they're also kind of trying to tap this upward mobile diaspora. So in my opinion, the long-term story remains intact. There would be, a temporary blip that we'll see because, real estate is a game of sentiment, and what definitely casts a negative, I would say, effect on that. But said that the real estate developers who have entered, the Indian real estate developers, they're quite strong in terms of financials, in terms of the understanding of the market, and the fundamental of the way market still remains in. So in my opinion, it will be a short-term blip, but again, the long-term story remains intact.
Okay. So, Prashant, the sense is that this is going to perhaps, even when this conflict is over, and we hope it's over, as quickly as possible, there are some who argue that this will still leave an impact on demand, that it won't be such a straightforward destination for global investors as what it used to be, because there's going to be that lingering geopolitical uncertainty, that sense of hesitation. So are you expecting this event to trigger a bit of a cool-off or not a downward spiral in prices, but definitely a cool-off in prices?
See, in a way, you are right. See, if you look at the way Dubai property prices have appreciated in last 3 to 4 years, appreciated by almost 65 to 70%. So we were, already in the late and there were talks of the market overheating. This war will definitely be a trigger for kind of cooling off. But we also need to understand the factor what the investors will be looking at. Now, for example, everybody knows the long-term story is intact. There are a group of investors, buyers who feel that they have missed the bus. If you look at the kind of appreciation you saw post-COVID, in fact, it might also open up a window of opportunity for people who think that they've missed the bus, and they would wait for a certain cool-off period and enter the market. So in my opinion, if you look at this situation, it would definitely lead to some kind of cool off, and there would be attractive entry point for where we'll see good recovery happening. For that, if you look at the past examples, for example, global financial crisis, the oil crisis that we saw in COVID, for example, during GFC, we saw prices crashing by almost 50 to 60%. Recovery period was almost 5 to 6 years, but they recovered sharply. Similarly, during COVID, it was a short pause. And then the market recovered quite significantly. The reason behind this is the people who participate in Dubai real estate come from 150 different nationalities. So apart from all the positive factors in terms of stability, friendly policies, it is the diverse nature of the buyers that provides the resilience to this market. So in my opinion, there will be, there's no denying that there will be a cool-off period. But again, there's the growth story remains intact.
And as far as these Indian developers are concerned that were looking at Dubai as a new frontier for expansion, do you see any change in those plans happening? Or is there a risk that some of that inventory just doesn't get, absorbed because of what's happened? Sobha, for instance, I'm not sure to what extent is the inventory already sold out or not, but, what are we dealing with over here?
So as I mentioned earlier, that all these players that you have mentioned who are there in Dubai, the Indian developers, they're quite mature in terms of their approach to the market. The balance sheet is quite strong. And the market was never a short-term play for them. It's kind of in a long-term, and they know form, or let's say for a global market, which purely depends on various factors where as I mentioned that 100 are participating in the market. So there are various host of factors that will play. So they have taken a very calculated risk, and in my opinion, this short-term blip might also prove them to kind of acquire certain assets at a good price. For example, land that they would be negotiating, they would renegotiate for better value. So I don't think this is going to reshape or force them to retreat from their strategy.
Okay, got that. Finally, what about Indian real estate? I mean, since we're talking, just your overall sense over here. I mean, the market's been, some point out that it's plateauing. I looked at some numbers that, Knight Frank had put out, overall India numbers, and it seems that transactions are stabilizing, plateauing. Some markets like NCR are actually seeing a drop. So just leave us with I know it's a very big question. It's a subject for another day, another time maybe. But what's your read through on the Indian residential market right now?
When we talk about momentum kind of slowing down or volume stabilizing, we also need to keep into account that we have seen 3 to 4 years of a very strong momentum. And real estate being a cyclical industry, I think it's quite common that, after a steep run, you see a period of stabilization where a lot of projects that have already been launched, developers would focus on kind of delivering them first, because now we have a very stringent RERA. And unfortunately, this global geopolitical tension, and apart from of AI that has been kind of still being assessed, has some kind of impact on the sentiment, definitely. And that's why we are seeing some kind of, I would say, lack of euphoria. But the structural story of Indian real estate, residential real estate, remains strong. It is quite evident by the way the grade A developers have acquired a huge amount of land parcel, record amount of land parcel have been acquired. And, out of that, 65% have been earmarked for residential development. And they're sitting at the best ever balance sheet strength, I would say, in a decade or so. So in my opinion, some kind of stabilization happening, but again, the launch and the sales story remains intact. If the geopolitical tension spreads, widen, and let's say there is some deep structural problem with the IT and ITS sector, we might see some kind of blip, but I don't see that happening anytime soon.
Okay, all right. We will leave it on that note. Thank you so much for joining us on the show today. Good to get that perspective, and this is a hot subject. I'm sure we'll keep tracking, of course, the real estate markets in the UAE. And good to get that first take from you. Thanks for joining in. That's the Anarok view coming in on how the property market is dealing with this war that continues to rage in West Asia. Thanks. Well, as we wind down on this edition of Opening Bell, we're getting back to geopolitics, and let's leave you with a very interesting report that our team has put together. Russian President Vladimir Putin has warned Moscow could stop gas supplies to Europe right now as energy prices spike amidst the Iran crisis. He blamed Europe's energy policies and Western restrictions on Russian oil for rising prices. After losing much of its European market, Russia is increasingly turning to China for its energy exports. However, now with West Asia looking at this big standoff, and with the Strait of Hormuz having been shut down and the US allowing some countries like India to resume buying Russian oil, perhaps the Russian market opens up again. Look at this report, and thank you so much for watching.
Russian President Vladimir Putin said Wednesday that Moscow could halt gas supplies to Europe, quote, right now. The warning came amid a spike in energy prices triggered by the Iran crisis. Putin made the comments when asked about European plans to ban Russian gas imports. Still, they have said that they plan to impose restrictions on purchasing the Russian gas, that they plan to do it in a month, with the 24th being the last day. And starting from 25th, they will impose restrictions on gas, including liquefied gas. And in 2027, they will impose further restrictions up to a total ban. At the same time, other markets are opening up. And perhaps it would be more profitable for us to stop supplying the European market right now, to move into those markets that are opening up and establish ourselves there. There is no political motive here. I want that to be clear. But if they are going to close us off in a month, or two anyway, then perhaps it is better for us to stop ourselves now. Russia holds the world's largest natural gas reserves and is the world's second largest oil exporter. But Moscow lost most of its lucrative European market after the region sought to reduce its dependency on Russian energy due to the invasion of Ukraine. Putin said oil prices were rising due to the, quote, aggression against Iran and Western restrictions on Russian oil. He also blamed Europe's, quote, mistaken policies in the energy sector. This is not a decision in this case. It is, as they say, thinking out loud. I will definitely instruct the government to work through this issue together with our companies. With Europe turning away from Russian gas, Moscow has turned increasingly to China, the world's leading consumer and importer of energy.